Did you know that by the end of 2024, there were 157,760 newly minted TSP millionaires? Pretty impressive, right? More than 150,000 federal employees and military service members quietly stacked up seven-figure retirement accounts through the thrift savings plan. Just slow, steady saving and smart investing. So today we're going to find out how they did it, what's changed since then, and how you can use the TSP calculator to map out your own millionaire journey. To begin with, let's talk about the elephant in the room. According to FedSmith, the number of TSP millionaires has dropped by 7% in just the first quarter of 2025. Now, before anyone panics or starts stuffing their money into a mattress, let's unpack what that actually means. And of course, as we know, the market has been volatile throughout 2025, and no shocker there. In fact, by the end of the first quarter of 2025, on March 31st, the C fund was down 4.3% year to date. The S fund dipped 8.9%, but the I fund has a pretty good return with 4.6% in the first quarter. That specific performance just in that month of March was exactly the kind of market turbulence that shook up account balances across the board. But one thing you have to remember, these millionaire accounts aren't based on your financial wisdom. They're just snapshots of your account balance. And rest assured that we'll have more millionaires next year and many more years after when the market continues to go up. Still, that 7% drop meant the number of TSP millionaires shrank from 157,760 at the end of December 2024 to 146,910 by March 2025. That's a difference of 10,800 people who dropped below the $1 million mark. But let's be real, most of them are probably still hovering in the high six figures, just waiting for that bounce back. So no need to press the panic button. So who are these TSP millionaires anyway? What kind of magic are they working with? Well, one thing is for sure, it involves no lottery ticket or day trading. Most of these people just play the long game. And that patient approach is evident in the numbers, where the average TSP millionaires has been contributing for about 28.62 years. That's nearly 3 decades of staying consistent, even when the markets got rocky. And get this, the largest account in the TSP sits at a whopping $8.73 million. Man, that's not just millionaire status. That's straight up boss level, getting to that 8-figure number. And let me know in the comment section down below if that's you. And I want to see proof. The breakdown is kind of fascinating though. And let me throw some data your way. So here we see that the largest group, over 4.3 million participants, has balances under $50,000. And on average, they've been contributing for about 6.03 years. As we move up the scale, over 1.8 million participants have accumulated between $50,000 and $249,000, with their average contribution history stretching to nearly 15 years. Then we have around 588,000 individuals in the $250,000 and $499,000 range, reflecting an average of just over 20 years of contributions. And moving further, we find a little over 240,000 participants with balances between $500,000 and $749,000, showcasing average dedication of around 23 years. And finally, just shy of the $1 million mark, we have about 118,000 TSP participants with balances between $750,000 and $1 million, who have contributed for an average of over 25 years. This means if you're in the 6-figure zone already, you're not far off. Keep going and keep investing. And I have a private client program to help specifically the people with TSP, 401k, or Roth IRA. So be sure to check out my website when you get a chance by visiting firestation.com/private clients, because I'm going to help you figure out where you are with your finances. And if you're on track to retire on time, you'll have to schedule your initial consultation with me by visiting firestation.com/consultation. But anyway, let's look at how this millionaire club has grown over the years. And TSP came out on April 1st, 1987 with a G fund being the initial investment option, of course, right? The good old G fund where you lend your government some of your retirement money. Then the C fund came out in January 1988. The S and I funds did not come out until May 2001. And that was actually a really good year to invest in the S fund when the C fund was taking a beating during the dot-com bubble burst. And back in 2011, there were just about 208 TSP Millionaires. To put that into a different perspective, that's about the size of a graduating class from a modest high school. And fast forward to today, we've got nearly 147,000 even after a market dip. And that is why it's the ultimate slow burn success story. So here's the snapshot of how the numbers grew over time. Back in 2012, the TSP Millionaire Club was somewhat of an exclusive club, right, or group, with only 562 members reaching that milestone. However, just 2 years later, in 2014, we witnessed a significant surge in numbers, jumping to 4,167. And continuing its impressive climb, the number of TSP millionaires more than doubled by 2016, reaching 9,599, and clearly illustrating the increasing momentum that we're seeing. Now, fast forward to 2018, the TSP Millionaire Club has swelled past a significant milestone, reaching a solid 21,432 members. And this is where the real magic starts to happen: the power of consistent saving. Yes, but even more so, the undeniable force of compounding returns. If there's one financial commandment I drill into my clients' heads, it's this: understand and embrace compounding. Trust me in this one. It's not just a concept, it's a game changer that can seriously accelerate your journey to that 7-figure mark. And I started my TSP account when I was on active duty in the Air Force in 2005. How much do you think that's grown over the course of 20 years? And even with the market uncertainty of 2020, the number of TSP millionaires still surged to 49,620 from 2019 to 75,420 in 2020. That's incredible, right? And all the way to 2021, it surged to 112,880. And take a look at the growth in 2022. There was actually a significant decline from 2011 to 2022. And 2011 was 112,880, but by 2022, because of the bear market, which the market dropped by over 20%, it has declined to 76,889. But in the following year, it just grew right back to 116,827, which was more than what it had in 2021. And it just continued to grow to 2024 and then to 2025. And as you can see, this wasn't some overnight millionaire explosion. It was a steady and deliberate climb. And if you're wondering, can I really become a TSP millionaire? The answer is absolutely, but not without some good old-fashioned patience and consistency. So how did they do it exactly? Well, these millionaires were not maxing out their TSP just 1 or 2 years. They were doing it over the long haul. And most contributed the IRS limit each year, which, by the way, is $23,500 in 2025. If you're 50 or older, you can throw in an extra $7,500 as a catch-up contribution, bringing your max to $31,000. But did these TSP millionaires have to contribute to the maximum IRS limit to achieve the 7-figure status? Absolutely not. It might have taken longer, but they have been consistently investing. And I'm going to show you that in my TSP calculator later on in this video. Second, they do disciplined investing in stock funds. Historically, stocks have provided higher returns over the long run compared to more conservative options. Basically, these TSP millionaires haven't shied away from the C fund, which tracks the S&P 500, the S fund, which tracks small and mid-cap stocks, and the I fund, which tracks international stocks outside of the US. Combine that with government matching, solid long-term investment choices, and resisting the urge to panic sell during downturns, and boom, you've got a recipe for millionaire status. So the next time someone tells you it's impossible to become a millionaire on a government salary, or even as a military member, just remember, almost 150,000 people have already done it. And they didn't do it with some magical secret or insider tip. They did it through time, discipline, and leveraging the TSP's low-cost, high-value structure. And I understand that many of you are facing a reduction in force or RIF, or taking an early retirement. But this video doesn't take away the concept of long-term investing. Even after you leave the federal government or the military, your TSP will continue to grow if you continue to invest in the funds that you strategize to get for that certain average annual return. Speaking of seeing the potential in action, let's pull up a TSP calculator and bring this to life. So this TSP calculator is only available for my private clients and the course members, and you can check out the courses at firesearcher.com/fireinvesting. But anyway, this TSP calculator is pretty generic. And if you can't see the screen, you can always pinch on your mobile device and you can just zoom in on the spreadsheet. And I'm not gonna zoom in or zoom out while I'm presenting this case. But anyway, I'm gonna use my name as an example. But before you do this, this is what I want you to actually pull up. And you can go to the TSP website, right? And just click on the contribution details. And this is what you need. And what you want to do is click the date where it says January 1st, 2025. And depending on when you're watching this video, maybe you're watching this in 2026, then you need to select January 1st, 2026. But let's just say for 2025, what you want to find out is what your balance details were as of January 1st, 2025 to have the accurate numbers. Because remember, the contribution period is from January 1st until December 31st of 2025. And this screenshot that I'm showing you right now doesn't belong to anyone. This is just for educational purposes only. So if you ask me who this account belongs to, we made this up so that you can see it, all right? But anyway, let's assume that you have a total balance of 88,942 over here, right? And what you want to do, again, you select that date, January 1st, 2025, and you want to make sure that these are all displaying as of January 1st, 2025, and you'll understand why when I show you the spreadsheet. Now down here, what you want to look at is your agency contributions and earnings, okay? So if it's auto 1%, it should say auto 1% and match, because if you contribute 5%, you should be getting that 5% employer match. And all of these dollars are going to be in the traditional TSP portion of it. So you're going to add up $5,005 and $20,022 from the traditional TSP. Plus, this is your contribution for the traditional TSP. So you want to add these three amounts together, because for the traditional TSP is what you put in, and the auto 1% and match is what your agency or your employer, whoever the department is, put in throughout the years. And it's going to tell you if you're vested or if you're not vested. But anyway, what you need to look at down here is your Roth. So Roth is completely separate from the TSP. So if you look to the bottom here, you see in the middle, it says $63,612 is the total Roth balance. So that is the current balance with the earnings and contributions. What you really need is the contribution details. So this is what you put in for $51,130.52 out of your paychecks, and you already pay taxes on it. So, this is something that you need to keep track of every single year. So if you subtract $51,130 from the total balance of $63,612, then you're going to get the earnings, right? So now you have $51,000 in contributions and $12,000 in earnings. It's very important that you keep track of those. So if you leave the federal service or the military one day, then you need to have those balances ready to go when you transfer the money, if you decide to transfer the money over to your Roth IRA, to differentiate what you pay taxes on and what you haven't. $12,000 in earnings, you haven't met the 59.5 rule, but the contributions, you could take that out when you move it to the Roth IRA, but that's a topic for another day. So be sure to subscribe if you haven't done already. So going back to the TSP calculator, so having that information available, so I'm going to use the same example here. You see where it says the beginning traditional TSP balance, that's as of January 1st, 2025 for $25,330, because I broke it down into three, right? So if you look at it, I have the auto 1% and I have the employer match, and then I have the traditional TSP contribution, which came from your paycheck. And then the next one is just the total Roth balance, because the breakdown is going to be on the right side of this spreadsheet, which I will show you in a little bit. But this is the total Roth TSP balance, okay? And this, again, is only available for course members. And you can always change from TSP, 401k, 403b, or 457. And once you change the name, it's just going to change everything on throughout the spreadsheet, which is really neat. And you want to make sure that you have your annual income selected correctly. So if it's $100,000, $75,000, you want to select that. I just put my name on there for side. And then the year that you're beginning to track this is 2025. And you want to make sure that you put the correct age in there. So if you're going to be 30 years old, and let's say you're 29 right now, and you're going to be 30 in 2025, you need to put 30 in there. So if you're going to be 35, let's say 35 in December 2025, then you actually need to put 35 on the spreadsheet so that it's going to track the year that you turn 35, not the age that you were previously, if that makes sense. But anyway, this is all the profile right here that tells you what your total contributions are, catch-up contributions, and after-tax contributions, okay? Now, if you look at the purple side over here, this is all traditional TSP right here. Just the traditional TSP. I'm going to show you the Roth TSP in a little bit. So you see that traditional balance carried over from here on what I typed in. And then if you're putting in the maximum to your traditional TSP, you can select the percentages. Let's say you do 15%, or maybe you do 20%, right? And if you make $100,000 a year and you want to max out your TSP, you can just select max, and it's just going to max out up to the IRS limits on your behalf in the spreadsheet. So this is really neat. But if you can only do, let's say 15%, then it's going to tell you what that's going to be. And on the right side, let's say you do an age 50 catch-up contribution. So you're planning to max out your $7,500, you can do that, or you can manually enter how much you want to put in there. And for age 60 and 63, if you're planning to work past 60, you can put 11,250 here, and that changes that number at the bottom here once you turn 60. You see it's highlighted, right? And the other neat thing about this is that you have that employer contribution, which is already calculated 5% of your income, right? And then you can put the withdrawal age, which is 55 under the rule of 55 that traditional TSP is available to you. And you can select what that withdrawal rate is going to be. You can do 4%, you can do 3%. So right now, 4% at age 55, you could withdraw up to $67,000 by the time you're 55. And let's just say that you're not happy with the 55 and you want to wait until you're 60 to do it. Now it just changes for you on your behalf to $100,000 because you're going to have $2.55 million on the right side. That would be the total balance. And you do the 4% withdrawal rate, it's going to be $100,000 or a little more, right? But let's say you're not comfortable with 4%. You can change this to 3.5%. You see how it lowers the distributions down to $87,000. Now you can bring it down to 3% if you want to. It's going to bring it down to $75,000. So you can play around and see how this looks, right? And the other important thing that I want you to remember is the annual inflation rate. You want to keep it at 2% or maybe higher. It's up to you. But if you do it too high, it might inflate too much. So just keep that in mind. I typically just put 2% inflation rate so that the employer contribution will just increase by 2% every year. And then the average annual return, I put 6% as the most conservative return. But if you're someone who thinks that you're going to make 7%, 8%, or even more, you can change that number. And I can just do 8% here, 7% here, or something like that. So the difference between these two is that this one is the year-to-date portfolio return. So what your portfolio is doing just year-to-date from January 1st, 2025 until today, right? If you're watching this in 2025. And then the future portfolio return will be more like a prediction in the future. So if you just want to do 6% in the future, you can, or you can do 7%. It just really depends on how your portfolio has been performing in the past. But just remember that how it's performed in the past doesn't really guarantee how it's going to perform in the future. So just keep that in mind. And when I scroll to the right, you're going to see a Roth TSP. It's much more expanded for the Roth TSP. So I'm not going to go through every single one of them, but what I do want you to put in is actually the birthday. So I'm going to put September 1st. I'm going to say 1995. Okay. And March 1st, 2055, I'm going to be 59 and a half. So I will be 30 years old right now. And for Roth TSP, you want to put the withdrawal age at 60 because technically you cannot make distributions from your Roth TSP until you're at least 59 and a half. Unless you rolled it over to your Roth IRA in mid-career or something like that, then you can take the contributions out a lot earlier. And the same thing applies with the 4% withdrawal rate, and then the annual inflation rate remains the same. What's different about this is on the right side. So this is what I was talking about for the contribution breakdown, right? So from that screenshot that I showed you earlier, it had a $51,131 is what you contributed, let's just say. And then it gets subtracted from the total balance so that you have earnings of $12,482. So you can keep track of the Roth contributions throughout the years, no matter how many years you decide to work in the federal government or the military. Okay, so let's say you are someone making $100,000 a year and you want to max out your Roth TSP. Let me just show you this. This is pretty neat. It's going to show red on this. Why? Because the traditional TSP did not get cleared out. So what you want to do is you want to make sure that you put a 0% here and for the traditional TSP, and then just you can do the maximum for the Roth TSP. because the maximum limit is 23,500. But what if you want to split the traditional and the Roth, right? You can do it that way. So you can do 12% here. Let's just say you do 12% over here in the traditional TSP, and that's still over the limit. So you can bring it down to like, let's say 11.5%. Now you're good, right? So a lot of people like to do that when they're at that marginal tax rate threshold of 22% to 24%, or maybe 24 to 32%. So it's just a good strategy to have. Or maybe it's your personal preference to have a mixture of pre-tax and the Roth. That's really up to you. But in the meantime, let me go ahead and zero this out just for this exercise. And let me go to the Roth for maximum, right? So let's say you max out your Roth TSP every year. And then in the end, you want to have your catch-up contribution going into the traditional TSP over here, but you want to maintain your contribution in the Roth TSP. You can do it that way too. So at the end of it, let's say you're at the age of 30. By age 60, you could have $2.1 million if you max out your TSP every single year. But what if you only do 15%, right? So if you do 15% and you're starting with $63,000, you would still have about $1.4 million by the time you're 60 years old. But keep in mind that your traditional TSP is going to continue to grow. And if you look at it on the left-hand side, if you do the maximum catch-up contributions, you could have over $800,000 in the traditional TSP. So if you look on the left-hand side, it's going to give you the complete total of the TSP balance. So by age 60, you could have almost $3 million in the TSP combined. And by age 55, you could have $2 million combined between traditional TSP and the Roth TSP. But what you really want to have that breakdown is right here. All right. So let me change this back to 55. So if you want to retire by 55, 56, 57, and you want to start taking money out of the TSP under the rule of 55, you can. Look at this. This is an extra cash flow that you could have if you decide to retire early. That's almost $21,000 a year because you would have $529,000 on the traditional TSP, assuming this is the beginning balance, right? And for the Roth TSP, again, you could have the rule of 55, but you don't want to do that with the Roth TSP because you're going to trigger what's called a pro rata rule. The Roth earnings, you cannot take out until you're 59 and a half. Contributions you can take out at any time. But the Roth TSP, doesn't matter if it's TSP or 401k, they cannot differentiate between contributions and earnings. So that's why it's not a good idea to take money out of the Roth TSP until you're 59 and a half, unless you roll that over to your Roth IRA. I hope that makes sense. But anyway, this is how you kind of play with the numbers and see how much you could grow. And let's say you want to max it out. Make sure you put max here, and you can max out your contributions every single year. And your savings rate will absolutely matter every single time. And for the bonus one, if you're in the military, active duty, the other thing that you can add is right here. It's called combat zone tax exempt TSP contributions. So if you're, let's say you're a Fed and you served on active duty and you went to Iraq and Afghanistan. I went to Iraq and Afghanistan and I had a tax exempt TSP contribution. That means that the money that I put in was pre-tax and the money will grow tax-free, and then I can take it out tax-free too. It's a triple tax advantage for the TSP, only available to active duty members. But anyway, if you have that, you want to make sure you keep track of it. If you make any contributions to the tax exempt, you need to put that on there. And the maximum limit is actually $70,000 for the tax exempt TSP contributions combined between the employee and the employer. So it's pretty neat. And if you have any previous balance from the tax exempt contributions, you want to put that in here. So you want to keep track of that. That is the one bucket that you cannot. I mean, you can, but you could roll it over to your Roth IRA, but the Roth IRA does not recognize this triple tax advantage because it's only available for the TSP, for active duty members. So if you decide to put it over to your Roth IRA, then you might lose that triple tax advantage status from pre-tax, tax-free growth, and then the tax-free withdrawal. So if you have any of that, I recommend actually just keeping it where it is in the TSP. But it's really up to you and your personal finance situation. Now, let me just say this. Wealth doesn't happen by accident. It happens by design. And lucky for you, the TSP is one of the best designed retirement tools out there. It's like the Honda Civic of investment accounts. Reliable, affordable, and get you where you need to go without all the fancy bells and whistles. But you've got to drive it. You've got to put gas in it. You've got to check the map every now and then. Your savings rate will matter more than the average annual returns from the market. Can you increase your contribution rate from 5% to 10% next year after you pay off all your debt? Can you increase it from 15% to 25% in a few years? Can you max out your TSP contributions when your income goes up? So here's your next step. If you haven't already, pull up the TSP calculator and run the numbers. And you can go to firesector.com/fireinvesting. All right. So look at where you are, where you want to go, and what it'll take to get there. Make your plan, stick to it, and don't let short-term dips throw you off your long-term game. And this has been another beast of a video, and I hope you got a lot out of it.